In this video, I'm going to talk about what the chart of accounts is and give you some strategies for setting up your farm's chart of accounts and shed some light on how it all helps you in assessing risks, evaluating opportunities, and making good decisions. So, your chart of accounts is a list of all the different categories used to organize all the financial components that make up your farm business. These include your bank accounts, your assets and liabilities, as well as your income, expenses, cost of goods sold, and some other types of transactions. And this may be a very long list. For Entropy Farm here, it's our example. It's got at least 60 different accounts. The chart of accounts creates this structure for all your financial data, and it sets up your ability to understand relationships of farm transactions, things like income to expenses across your farm enterprises or market channels, as well as to see the balance of what you have, your assets, what you owe, your liabilities, and what you've retained as equity. Now, to help you get a perspective of what I'm talking about here, let's look at a table that shows where all of this structure eventually shows up. The accounts that you create in your chart of accounts will mainly be seen in one of the two major financial statements that you should routinely look at and evaluate. One, your income statement, also referred to as a profit and loss statement or P&L, which will have these five major sections, each with their own list of accounts within. And then two, your balance sheet, which will be made up of these sections, some of which you may not use or have data for, and that's fine. Your chart of accounts will also show up in other financial planning tools like enterprise budgets and cash flow projections. It's a structure that you will see replicated across many financial reports. Now, to illustrate how this organization or structure eventually comes to life, telling the story of your farm business, let's look at a slide that shows a broad overview of an income statement. In an income statement, the chart of accounts is seen as the first column on the left side of the statement. Now, one of the most important things in setting up your chart of accounts is to separate the income and expenses of your core farm operation from other income and expenses that are derived outside of the core farm operation. This separation in the chart of accounts is illustrated here by this bright green line. And now by core farm operation, I mean the work and activities specifically associated with your growing, producing, harvesting, processing, or marketing your farm products. This kind of stuff belongs above the green line. And by income and expenses that are derived from outside your core farm operation, I mean things like loans and grants, cost share payments, as well as loan interest and credit card interest payments. That kind of stuff belongs below the green line. What this organization does is it allows the data to show you how your core farm operation is doing by itself as a business, and whether or not something else outside of your core farm operation is driving your profits or losses. This simple separation of your financial accounts is one of the biggest steps towards utilizing your farm financial statements for assessing risks or evaluating opportunities. Now, let's go look at a few key strategies to consider when setting up, organizing, and using your chart of accounts. This template lists a whole bunch of accounts typical to a small farm business, presented here in a format that is similar to what QuickBooks offers you if you use that platform. First, at the top of our list, you'll see some accounts which show up in your balance sheet, your bank accounts, your assets and liabilities and equity. You should create, name, and use these to fit your specific farm and so that they make sense to you. Now, one special recommendation I want to make in this section. I recommend creating what I call jokingly a fake bank account, which you can name daily receipts or holding tank or something like that. This is to address something perhaps unique to small farm businesses at this time, and is an idea which solves some issues around transactions that need to be split across more than a single account within the chart of accounts. This created bank account, which exists only on paper, will be a place for you to input data from certain sales or revenue streams that you need to divvy up or assign to different income or expense accounts for accurate record keeping. A common example of this would be any sales through Square or other platforms that deduct a fee or percentage of sales, particularly if you have linked your Square account directly to your QuickBooks account, where a sales of, say, $10 of vegetables at farmers market would go through Square, so that your real bank account actually would only be receiving something like $9.60. Square takes about 40 cents of transaction fee. So for your bookkeeping records to be accurate, you want to have a record of that full $10 in sales for your vegetables showing up in your vegetable income account. But you also need to account for the 40 cents expense that you've paid in card processing fees. And all at the same time, you need to match your actual bank account statement record deposit for $9.60. The gist of it is, this holding tank bank account will be a place where temporarily transactions can be entered, even directly linked, so that they can be manually split among various other appropriate accounts. And this highlights another important concept, that your chart of accounts will be unique to your farm. It will not be identical to this template, nor the QuickBooks template, nor to any other farm or any other business chart of accounts. You can create unique accounts, deactivate or hide accounts that you don't need. And while you're doing this work of setting up your chart of accounts, try creating sample income statements and balance sheets a couple of times before you finally lock in your chart of accounts, to make sure that it makes sense to you, and so that you know where your bank accounts, your assets and liabilities, and income and expense channels all live within your financial statements. Now, moving down past the banking and equity section, we find the next section in the chart of accounts focuses on the income or revenues accounts. And in this template, I have organized the income accounts by enterprise. So here's a chance to highlight a few more strategies. First, when setting up your income accounts, organize the list either by enterprise or by market channels. Try to avoid mixing enterprise accounts together with market channel accounts in your income section. A combination of both will often lead to mistakes or inconsistencies when inputting your data, and can muddle the clarity of the financial analysis that comes out of it. You want a structure that allows you to view enterprise data separate from market channel data. So set up your income accounts by whichever one makes most sense to you. Your primary farm business may best be defined through your enterprises, or they may be best defined through your market channels. Choose whichever lens fits best for your operation and your comprehension of what you do. Then, to view your operation through the other lens, you can either export your income statement to a spreadsheet like Excel and create columns for a view of your farm through that other lens, or you can use classes in QuickBooks, if you have that, to present financial data through that other lens. Now, another strategy here is create and name your accounts to capture enough detail, but not too much, such that you can readily distinguish your main overarching revenue and expense streams in a way that makes sense to you. Your chart of accounts should be a macro level list, not full of minute details or items. You don't want to have an account for every vegetable or every cut of meat or every customer in your chart of accounts. I advise that you create accounts that focus on your main farm activity points, which again are either enterprises, vegetables, flowers, herbs, eggs, pigs, or jumping to my next template, market channels, farmers markets, farm stand, CSA, restaurants, etc. Again, it's up to you to decide which framework works best for your farm. Decide whether you want to be looking primarily at the profitability of your core farm operation through your various enterprises or through your various market channels. And finally, one more very important strategy in setting up your chart of accounts: create parent categories or sections with children and even grandchildren accounts as needed. This really gives clear form to your scaffolding, particularly in the income statement. You can see here in this template, in the income accounts, I have created parent categories named retail, wholesale, and services, the major types of market channels, and each of these have their own children accounts. But also, this applies to your expenses section where you want to build accounts with parent and children categories. Let's jump down in this template to consider some specific strategies for expense accounts. I recommend creating at least these 6 parent categories: direct operating expenses, which are the variable costs that are associated with growing, producing, and harvesting your core farm operation; marketing expenses, which are variable expenses incurred in the sales and marketing of your core farm products; general and administrative, which are some of your overhead costs for your core farm operation; occupancy, which is the overhead costs of utilities, rent, and the like; repairs and maintenance, self-explanatory; and labor, also self-explanatory. Within these parent categories, you create and name the children accounts that fit your business. Again, this template doesn't have everything that your farm will have. Now, an important strategy to consider here in the expense section is try and align your variable expense accounts with your income accounts. It's never going to be a perfect one-to-one match, but just think about what components of your farm you want to keep the closest eye on. Is it the profitability of certain enterprises like vegetables versus laying hens? Or is it the profitability of certain market channels like your CSA versus wholesale restaurants? You can create children and even grandchildren expense accounts that allow you to see in your income statement the costs that are directly associated with certain income streams. I have a good illustration back in our Entropy Farm chart of accounts slide. Let's go look at that. This sample farm, which produces vegetables and eggs as their 2 primary enterprises, has their income section in the chart of accounts set up by enterprise. And so, in the expense section here, within the direct operating expenses parent category, they have created and named various children accounts to capture either some of the vegetable-specific expenses like supplies and fertilizer and soil amendment children accounts, and then one to specifically capture the expenses that are directly associated with their egg enterprise, the livestock expenses child account. As with the other children accounts, there are grandchildren accounts which get down to distinct expense channels, like for their egg business, there's bedding, fencing, grain, vet bills, etc. These are what we call grandchildren accounts, but they are still very much from a macro level view of the farm, not getting too deep into minute details, just enough so you can see income and expenses organized in groupings that make sense to you, and will allow you to see subtotals of these various children categories and then get important comparisons across your income streams from either your enterprises or market channels, depending on how you set up your income accounts. So, as I see it, what you have with the chart of accounts is the opportunity to track individual transactions that are related to what you deem to be the main arteries in the life flow of your farm. Maybe it's grain purchases specific to your laying hens, or maybe it's labor and distribution and marketing expenses to your wholesale restaurants. Whichever you choose and set up will become the diagnostic tools of your income statement, your balance sheet, your cash flow projections, and more. So, to conclude, the better you understand where your income and expense numbers live and how they interact with each other, the better you will be able to extract and utilize the information that is held within the structure. In other words, the better organized your chart of accounts is, the better the information that you get out of it will be. Good decisions are drawn from good data, and good data is drawn from good record keeping. And all of this begins with a well organized chart of accounts. So thanks for watching. You'll see below a link to MOFGA's form where you can request technical assistance or get further information and resources.